you tired of chasing pumps and falling into traps in crypto trading? The truth is, consistent profits don't come from hype. They come from strategic execution, reading the real language of the charts, and following tested trading setups. In this video, we break down real charts that reveal the most powerful crypto strategies used by professionals. Whether you're a beginner or advanced trader, these patterns will completely change how you trade. Let's dive into the charts that matter. This first chart may look simple, but it reveals one of the most fundamental truths in price action trading: rejection equals reversal. When a candle leaves a long wick behind, it means the market tested a level and got rejected hard. Look closely at the pattern, a series of indecisive candles, followed by a strong engulfing move. That's your trigger. The sell marker isn't random, it appears after buyer exhaustion, where the upper wicks show failed attempts to push higher. Likewise, the buy area appears after price dives and then instantly rebounds. These setups often reflect smart money positioning. If you catch them early, you align with institutional momentum. Now let's add volatility to the game with Bollinger Bands. In this chart, long trades are signaled when price tags the lower band and gives a bullish reversal. Short entries appear when price spikes above the upper band and then sharply reverses. These outer bands reflect extreme volatility. When price touches them, it means the market has stretched, reversion is likely. But here's the key: wait for confirmation candles. Combining Bollinger Bands with RSI or MACD gives you double confirmation and helps avoid false signals. This is one of the most effective range-bound strategies in crypto. This next chart shows signal zones aligned with specific market sessions, like London or New York Open. Each purple vertical box represents increased volume and volatility. Notice how the arrows signal bearish entries after fake bullish spikes. These are session-based trap moves designed to trick retail traders. The volume surges during this time are not random. They often mark where smart money enters and exits. By identifying these boxes, you avoid getting caught in manipulation and trade with institutional flow. If you're a scalper or intraday trader, this insight is pure gold. Now, let's break down one of the most reliable trend reversal formations, the double top. In this chart, price forms two equal highs at the same resistance level. This is where buyers get greedy, but the second top fails to break higher. That failure is critical. It signals weakening bullish momentum. Once price breaks below the neckline, that's your confirmation to sell. The best entries are on the retest of the neckline, giving you a tight stop loss and a clear target based on the pattern's height. The double top is a classic because it reflects both psychology and structure. What you're seeing here is the heart of market activity, the exchange order book. These green and red levels represent buyers and sellers waiting to enter the market. When you see heavy buy walls or sell walls, it gives you insight into potential support or resistance. But not all of these levels are real. Some are spoof orders meant to manipulate you. That's why you must combine this data with live price action. Watch how price behaves near these levels, if it respects them or blows through. This is how pro traders anticipate moves before they happen. This chart shows a clean consolidation phase. Price moves sideways in a tight range. But beneath the surface, something is building. Volume starts to rise just before the breakout. That's your clue. When price breaks the range with volume confirmation, it signals a strong momentum move. Enter on candle close above the range, place your stop inside the box, and ride the breakout. This strategy is powerful when aligned with session timing and news catalysts. It's all about patience, wait for compression, then explosion. One of the most famous reversal patterns in trading is the head and shoulders. This chart illustrates it beautifully. The market forms a left shoulder, pushes higher to create the head, then prints a lower right shoulder. This shape reveals buyer exhaustion. The break of the neckline confirms trend reversal. but smart traders wait for a retest of the neckline. That's where you get the best risk reward. The profit target is calculated by measuring the head to the neckline and projecting it downward. It's simple, effective, and extremely reliable when confirmed by volume. Support and resistance zones are where the battle between buyers and sellers happens. In this chart, you can see how price reacts precisely to these levels, bouncing off support and rejecting resistance. This tells you that traders are watching these zones. But don't blindly enter when price touches them. Wait for rejection candles, wicks, or engulfing formations. The best trades come when support turns into resistance or vice versa. This role reversal is a high probability opportunity for trend continuation or reversal. These zones are your battlefield. Trade them with respect. Swing trading is all about identifying trend waves, higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend. This chart shows how the price naturally flows in swings. The trick is to enter on the pullbacks and ride the trend to the next high. Don't chase the price, wait for structure to form. Use tools like Fibonacci retracement or moving averages to find entries at swing lows. Swing trading gives you the best of both worlds, less screen time and better accuracy. In this final chart, you see a perfect example of Confluence where dynamic and static support zones meet. The moving average acts as a trend guide, while the horizontal level is a tested structure. When both align, your trade has a higher probability of success. Look for price rejection off the EMA with a strong candle, or confirmation of a horizontal level holding. This setup works great in trending markets. EMAs are not just trend indicators, they're liquidity magnets that algos respect. When price reacts to both EMA and zone, pay attention. You've just seen the most effective crypto trading strategies explained with real charts. These setups, Bollinger Band fades, head and shoulders, breakouts, and EMA bounces, are all tools you can apply starting today. Trading success isn't about luck, it's about discipline, repetition, and timing. Let me know in the comments which strategy you're going to test first. And if you found value in this video, smash the like button, subscribe to Financial Freedom FX, and share this with fellow traders. Your journey to consistent profits begins now.